All right, guys. So this is the daily chart on this 10. As I said, I am bearish. As you can see, price pulled back to this daily bearish fair value gap. The daily has broken structure down to this level after reacting off from this premium bearish order block. Price has been selling. So we fill this fair value gap. We're expecting price to sell to minimum target this rejection block. Okay, rejection block. So that's the minimum level I'm expecting price to sell to. And as I said yesterday, price sold aggressively from this fair value gap. On the 4-hour chart, price has pulled back to a 4-hour bearish fair value gap here. And it's reacting. So going down to the 1-hour chart where we can apply. So now we know our bias is bearish. But coming to the 1-hour chart, you can see that price has pulled back aggressively into premium of the range. Breaker block is here, fair value gap. We have some highs here that has been swept. So what do we see? We have an X, which was a reversal, and we have an A, so accumulation. So if the cycle, the daily cycle is beginning with an X, you can expect the next quarter to accumulate. So that's what we are seeing here, accumulation. And you can expect the third quarter to be what? A manipulation. Okay, so I'm expecting like both ends of this consolidation cycle within Q2 to be manipulated. So I'll allow to see manipulation here, then manipulation there. Then the distribution will come from the last quarter, okay, where you have sales for the rest of the day to this target. So as you can see, looking at what has happened for the first two quarters, you can see that price is bullish, aggressive run to the upside, shifting market structure above this swing high. We have fair value gaps down here, and we have liquidity here. So we take liquidity in a manipulation phase into this fair value gap. I would like to see price reacting off these levels here to then come and manipulate the upside before selling. So I would love to see something like that. So we are already in Q3, the manipulation phase. So if you're gonna get any confirmation as we are manipulating the lows, then you can take some buys. So possible areas price can come to the 1-hour fair value gap can be refined to this level. So that'll be my expectation. So we'll come back to check on it. Now let's look at step index. If you have any questions, you can ask. Okay. You can unmute yourself and ask. So step index on the daily chart. Uh, 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 mm. You can see that we are bearish. Block structure here. Pull back to a bearish fair value gap and prices coming to the downside. And I think this low was the target for these cells, and we met that target and reacted impulsively. Came to this bearish fair value gap, and we are coming down. And look at how slow price is coming down. So I think price may react a little bit from this bullish order block. So that would be the target for me for sales. And if price gets there, I'll probably look for some buys. So we have this huge fair value gap plus order block. So as price is coming down, I think that would be the target for the day. So let's go to the 4 hour. So the 4 hour has manipulated some highs, equal highs, swept right there. And we are having a shift in market structure here. And price has pulled back to a balanced price range. Let's go to the 1 hour. We might find some clean levels. Yeah, so on the 1 hour chart, we have that clean fair value gap plus order block. Price is reacting from that level. So as I said, my target for the day will be this level here. Yeah, so you definitely can look for some sales. So let's go to the 5 minutes chart. Okay, now let's mark our this thing 12 here. Now let me go to the 1 hour chart. I love to mark this on the 1 hour chart. So I will see what the day has done. So the first quarter was an X, where we had a continuation of this bearish momentum. So if you have an X, you can expect the next quarter to be what, an A accumulation, and manipulation for the third quarter. So we are in a manipulation phase where we can look for what setups. I'm go back to the M5. Come on. Okay, so coming down to the M5, we are in the third quarter manipulation phase. We are bearish, you're looking for sells. So as you can see, the third quarter manipulated the highs within this level. This was the last high, we manipulated it, and we are breaking down aggressively. Now let's look at our 90-minute cycles. The first one being 130. So after 130, we can start looking for what sells. Anyway, so yeah, we are looking for sales after 130. We can say that K1 or the first 90-minute cycle within Q3 has caused the manipulation up into the 1 hour level, and we have a shifting market structure here. So if this was the second 90-minute cycle, we will start selling from here. But I would like us to wait for price. I would like to wait for this after 1:30 before we look for any entries. Targeting, you have this um sell side liquidity, clean equal lows. That'll be a perfect target. That low give us 2R, so we can take partials there, and then you leave something on to this level for let's say 3.5R. But we definitely have to take some partials here, looking at how clean the lows are. So there's something you will be hitting the sell bottom on after 1:30. And of course, sell right away. But after 1:30, you will know that this level is holding or not. Okay. There's no rush. So I'll come back and look at this after 1:30. Let's check 10-1 is. So I'm bearish on this 10-1 is. Let's go to the daily chart. So this 10-1 is has formed an all-time high. Okay, it has gone above all the previous highs. Strongly bullish to the upside, forming all-time highs at 9,600 price level. And it created a rejection block up there. Price pulled back to the rejection block and sold off. So we have this swing low. We also have part of this fair value gap remaining to be filled. Another fair value gap is here. We have the other block opening price here as well. So price may wanna come to a more discount level before any bullish continuations. You've already come into discounts below 50%. By looking at how price is reacting from this level, showing unwillingness to want to go above that high, we possibly be forming a failure swing, but price will take this swing low to fully rebalance this imbalance and then to hit this other block opening price. So the other block opening price happens to be the same level of the fair value gap low. So that's an interesting area. Opening price of the other block, and then this fair value gap, the lower end of it, the same level of the opening price of the other block. So that's a very, very important area that price may want to come to. So that's the remaining part of the fair value gap. Now let's go to the 4-hour to justify our case. Coming down to the 4-hour, we can see that we broke bearish here, swing low, fractal low, we broke bearish below. Price pulled all the way back to premium, bearish order block right there. So the rejection block I mark on the daily chart, go back to the daily chart. The rejection block I mark on the daily chart. If you go to the 4-hour, it is a bearish order block. Normally, rejection blocks on higher time frame would be an order block on a lower time frame. You can see price put all the way back to that level, and we broke structure down here again. So bearish on the 4 hour, broke fractal lows here. We have an order block in premium, price pulls back to that order block in premium, and it's rejecting. Now let's go to the 1 hour chart. Yeah, so we took buy side liquidity into that 4 hour bearish order block here, sold off aggressively. Now what we have here is previous day's low is resting just here, and we know that previous day's low has a lot of liquidity, so that will be the target for me today on previous day's low. So we've put back to we have this breaker block, this down close candle, but I mark only the top side, which is the wick to the body. Okay, but that side is resting in premium. And we also have this bearish order block. This more like a proportion block. The actual order block is here. These two up close candles that took liquidity. So that will be a bearish order block. We are currently reacting off from that level. So we can start framing some possible sells on the 5 minutes. Now let me mark the 90 minutes cycles and quarterly cycles. We're in the third quarter where you can look for some sells. Go to the 5 minutes. So after 1:30, we like to see market structure shifts. So we've come back to clear this swing high. So let's see if in the second quarter they close below that order block, then we may have a sell setup. When we target previous day's low. So guys, make sure to rejoin when we get cut off. So there's something we'll be expecting on this 10-1s. If you have any questions, you can ask. You also can see by 12 p.m., you know that price action is already bearish. We have put back to premium of the range, and we are looking for some sells. Let's check on step index. Yeah. So after 1:30, you'll be hitting the sell bottom on step index. Let me check this 25. So this 25, I think today price may reach for this fair value gap in premium. Okay, fair value gap in premium. To the left of it, you have an old low. Okay, so fair value gap, premium, old low. So that level is also a breaker. So I think that's what price would reach for today. Aggressively bullish. So let's go to the 1 hour chart to look for levels where we can key our entry from. Anyway, so the 1 hour chart, we know that we are bullish. We've broken bullish above this fractal highs. So we are bullish. And price, we are targeting fair value gap in premium. We have this buy side liquidity here as well. Areas where we can look for setups. We have this bullish order block here. We also have this bullish order block here. If price pulls back to any of these bullish order blocks, you'll be going to the 1 hour to look for some scalps. So here I'm seeing an AMDX playing out. I see that here we accumulated, we manipulated here, we are distributing. We'll go to 15 minutes to be clear. So in Q1, what do we see? Accumulation, very tight range. Q2, manipulation, taking the lows here. Q2 manipulated and broad structure up. So Q3 should be another strong distribution or accumulation, manipulation, distribution. So I expecting distribution from Q3 to our target here. Just that I don't have enough room for targets. The risk to reward is not that much, but we will take it. So either price should come here or here to give us some nice entries. So I think if price comes here, we can take aggressive buy without any confirmations. We target 2 points. We target the old low. So that'll give us 2.8 R with aggressive entry from here. Let's take it from middle point for 3 R. If price takes S out from here and then price comes here, we will look for confirmation to get in, and that will be the same target. We can even go aggressive from here as well. So our initial entry will be from the first zone, second zone. If the first zone fails and price comes to the second zone, we're gonna take it from the other block there. Let me mark that. and that'll give us even a bigger risk to reward for like. So I'll come back to check on it. Let's quickly have a look at step index to see what it's doing. Okay, so we can take this sell on step index as well. We are in Q2. We have already had manipulation and then a shift in market structure. In Q2, we are inside this breaker, this breaker block. So we are selling step index as well. Let's check on this 10. Okay, so this 10, I can see the manipulation, I can see the rejection. Now let's look at the 5 minutes for possible confirmations. We don't have any market structure shift yet, but there could be a failure swing forming around here because I see a BPR. Even though there's not a market structure shift, but let's take this buy on this 10 from the BPR. Let's take that buy on this 10 as well. 2.5 R for TP. Stop loss below the low. Are you buying this 10? How many of you have used BPRs for entry before? Let me know. Without market structure shift, just the BPR. BPR are effective when we've taken liquidity into did you get into that fair value gap? Let me see. I think we didn't. And got the M15. Okay. We didn't get to the fair value gap on the M15. But on the 1 hour, it is the 1 hour fair value gap that I've refined. Okay, it's a huge 1 hour fair value gap here. A huge 1 hour fair value gap. So we have an X and the reaccumulated here. So manipulation phase, you're trying to buy below this consolidation lows and then inside this fair value gap. Okay. So I can see the price hit this order block on the left. I'm go back to the 5 minute. Yeah, so look at how before you're gonna use BPRs for entry, look at how we took the liquidity. We took the liquidity with a bearish fair value gap. Immediately price took the liquidity. We broke the bearish fair value gap with a bullish fair value gap. So it makes this area a balanced price range. And you can use it for entry even without market structure shifts. This is a little bit advanced, but I use it in scenarios like this. The only thing I don't like is I would have loved to see price taking that low into this remaining fair value gap, but it didn't do that. I would have loved to see that, but it didn't do that. But I've still entered, and I'm anticipating a failure swing to form here. If I get stopped out, I'll wait for it here and get in again. Okay. So if you want to join, you can join as well. I'm definitely expecting a failure swing to form there. 25, we took a buy. We took a buy on it. Aggressive entry without confirmation. Let's check on step index. Oh my goodness. Step index is deep in profit, guys. So we are deep in profit on step index. How many of you joined the sell? How many of you joined the sell, guys?
I
I
did.
didn't.
How
I
many of
did
you?
not.
I hope you guys took the entry. We are deep in profit. Wow. I like the aggressiveness. Okay. So we are in Q3 and we already have manipulation. We had an X here and we had an accumulation here. So if there is an X starting the cycle, we are going to have XEMD. So XE accumulation M. So the third quarter would rather be an M manipulation. So you can see that immediately the third quarter open, we manipulated the short-term highs into the 1 hour level. And always in the manipulation phase, you can take entries. So market structure shifts within the 90-minute cycles. Q2 of that 90-minute cycle, we have a breaker, market structure shift, entry right there, and boom. So as you can see, although an entry was given within the first 90-minute cycle, but the real move came from the second 90-minute cycle after 130. That's why I say we should wait after 130. So that's a nice trade that we are in. Wow, wow, wow. That's nice. Beautiful. Beautiful trade on step index. We also took a trade on VIS 10 with a BPR. Okay, so as I said, I'm anticipating a failure swing, and we are already having the failure swing. Consider we are going down, pull back, down, pull back. We should make a new low, but you can see that here we have failed to make a new low, so that's a failure swing, and I was anticipating that to form, and it was based on this BPR. Took liquidity with a bearish fair value gap and broke that bearish fair value gap with a bullish fair value gap. That's a BPR. So as I said, it is more of an advanced entry technique because we don't have market structure shifts. But if you understand price this way, you can take entries from BPRs without fear. Okay. If only they want this buy side liquidity to be cleared, then we should go for it. So yeah, we are currently in a little bit of profit on West 10 as well. I just don't like the risk to reward, the consolidation and everything. So many synthetics. Nobody is pointing a gun at your head to trade VIS 50. Get rid of it. Let's look at VIS 10, our BPR entry. I think we are flying. Come on. So this advanced theory I talked about today, you wouldn't see it in any of my lessons that I've recorded unless you are live watching price with me. Once we take a liquidity pool with a bearish fair value gap and we break that bearish fair value gap with a bullish fair value gap, that's a high probable BPR. And you can expect a failure swing to form. Like I said, I was expecting a failure swing to form right there, right? And We pull back, form that failure swing within that BPR, and then boom, we're impulsing to the upside. No break of structure because if you're going to wait for the break of structure here, price would have moved heavily away. So are you gonna buy from here? You stop loss here? No, it doesn't make sense when your target is just here. So BPL, nice entry, nice rally. Anyone took this 10 as well, or you guys feared this entry technique? What again? Let's check on this 10. So this 10 is doing marvelously well. BPR entry, aggressive move to the upside, manipulation phase. So you see how you can use the AMDX and then XAMD to frame a setup. So we had an X, which was what? A reversal of the previous trend. If that happens, we can expect accumulation in Q2. Q2 accumulated. So Q3, what can we expect? Manipulation. And always want to be engaging from the manipulation phase. So we manipulated the consolidation low into a 1 hour fair value gap, form a BPR, entry given. We take the BPR entry, we are targeting the consolidation highs for 2.6 hour. That's a beautiful setup. That's a beautiful setup with AMD, XAMD. Okay. Beautiful, beautiful round, beautiful round, beautiful round, guys. I asked if anyone took the BPR entry as well, and you guys have not answered me. Are you guys there with me?
Yeah, I didn't take it.
Hmm. So that's a beautiful entry.
I think another thing that may want to make me, um, if I'm not thinking in terms of the BPR, which is absolutely amazing, I had to just write it down in my notes,
Mhm.
is I'm trying to make use of FIB there. FIB may give me a good entry also with that.
Yeah, no, no, the entry is not based on because
BPR.
if you're using the Fibonacci, before you
Yeah,
use a Fibonacci, you need market structure shift, a pullback inside a range, and
absolutely.
but
Yes,
here
absolutely.
no market structure shift. So what are you even using the Fib for?
That's true. That's
Yeah.
true.
So the idea for the entry is based on the fact that we've taken liquidity with a bearish fair value gap and we've closed above with a bullish fair value gap, forming a BPR. So that's the basic idea behind the entry. You only take a Fib entry if, like this instance, we break structure, we are bearish, take Fibonacci, you can measure from high to low and get a pullback. But here, you don't even have a break of structure. So how are you going to enter? So as I said, it's more of an advanced entry technique.
That's really true. But could you please go to, let's see what this reaction of this price action will look like on a 5 minute, since this is 15 minutes.
No, we are on a 5 minute chart. Look at that.
Oh,
Normally I'm taking 5 minutes entries when it comes to quarterly entries and then 90-minute cycle.
yes,
So
yes.
this 5 minutes. Well, as I said, we are also monitoring this 10. We want to see a close below the breaker and then we take some sales.
I think one of the aspects that I was still having some form of challenges with in quarterly theory that you taught us the other weekend is the ability to identify precisely the SMAD,
Yeah.
the SAND, but in
Yeah.
series of example you've pointed out here, I've been able to see some clue that can help me to re-identifying it.
Yeah, sure. So if Q1 was a clear move, okay, you can see that it's clearly an X. Sometimes it may be going up, but it may be going up like that, like this. Height range, okay, like a channel. That one I'll still call it an accumulation because it didn't have any large price ranges, just a tight range. Consolidation means we are ranging in a um, tight levels, like not any large range candles. Okay, so consider this a clear consolidation. This will be a clear X. So that for the consolidation, it can come like this. It can also come like the normal ones, up, down, up, down. Okay. So there's a normal consolidation that you may know, where you're just moving up and down within the range. No clear movement. It can also come like this. These two are all consolidation. Once you're able to spot it to know that Q1 is accumulating, then you can expect Q2 to manipulate. Now, sometimes Q2, instead of manipulating, can also accumulate, and we may have a large range of accumulation. Like I think I showed you one on this, was it this 10? This 10 one is, I guess. Let me check this 10 one is. No, I think this 25. Let me see. No, not this 25. I think I saw one example where we had both quarters accumulating. So that one you can expect the manipulation in Q3 and then distribution in Q4. And sometimes we may have Q1 expansion, also Q2 expansion. That one you can expect Q3 to what accumulate. So I'm trying to find that example that I saw, but I don't know. It was on the 5 minutes chat. Probably I've deleted the markups. Yeah, so we can expect these scenarios as well.
So I think from your explanation now, I can deduce that the general idea could be that we stay flexible with it to see it play out. Like for instance, if we have double of those particular sections played out in two quarters, in the
Mm,
1990 minutes quarters, we should just know that okay, the third one is going to be next on the list.
yeah, yeah. And normally
That they
waiting
are,
until the third one, you get enough
yeah,
information.
yeah, that's it's hard for the algorithm to, but it's hard to skip the next on the list of either AMDX or XAMD.
Yeah. So here was a clear X. And with this one, I'll call it accumulation because we are going up, but in a very tight range. Don't know, not much. Even here, we have some of, even if you are going to take it from here, that was some form of accumulation. So if this was an X, if the whole Q2 is not accumulation, at least some part of it, some part of Q2, maybe the first half of Q2 or second half of Q2 may accumulate. So here the first, I think the two-thirds of Q2 was accumulation. And we just have little expansion here. And then we finally manipulated in Q3. So XEM, okay, XE, and then the M, you can see went above the short-term high here into the fair value gap. And then so manipulation phase, we get entries and we sell.
Yeah, this particular price action looks so much like the V10 of yesterday's V10.
Yeah, yeah,
Very beautiful trade.
yeah. But sometimes when you're expecting accumulation, sometimes the whole maybe we had X in Q1 and we are expecting accumulation in Q2. Sometimes the whole Q2 may not be accumulation. Probably maybe first half of it or second half of it causing the accumulation, forming the accumulation. But it's still it has still accumulated within that session. And that's all we want to see. So for this 51 is yeah, I wouldn't be surprised at all if the setup fails. Because as I said, these highs are still too very clean. Too very clean. This sweep was too small for me. Just a tiny sweep. Too small for me. So they may go one more time to sweep it. That's why I said should take without a small risk. A small risk. And the risk to reward was not even also that good. Okay. Not even that to 1:2. So this is not a setup you should go on with your full risk. No. Okay, so with 25 is picking up. I think we will get a market structure shift soon. So the whole level is still holding. Price came into the other blocks down here. Um, market with this. Price went into that other block, opening price, respected it nicely, and we are back above the fair value gap. So now we may have a breaker set up right there because we've closed above this bearish order block. So that's a breaker entry. So if you did not get in, you can get in now from the breaker. Okay, from the breaker. I think we've already tested the breaker. We can as well just get in from the fair value gap since we closed above it. If we come back to test it again, it is still useful. And the target is at the old high still. So if this plays out, you have 3 winning trades on the live stream. We already have step index hitting our TP1. And then we have 10 with 10 BPR entry almost at TP. So if it's 25 plays out, we're gonna have 3 good winning trades and then 1 loss on 51 is 51 is I think we definitely hit our stop loss because I was never confident taking this trade. Yeah. So framing these setups is not difficult. You need to approach the market with a sound mind and yeah, just be focused. You need extreme focus to be able to see and understand what is happening. So as I said, trading is not just about give me a strategy and let me trade. It's more about understanding price because every setup is going to present itself in a different way, in a different way. But then you are trying to trade with a specific thing that you want to see. So in all those different scenarios, you're still gonna wait for it to align with the specific things you want to see before you take the entry. So you should be able to understand that this and this and this is what is happening. So I'm going to wait for this and that before I take my entries. If you want a simple, straightforward strategy, then it is the one I've given to you guys with the overnight highs and lows, market structure shift, and then entries. That one is quite simple. No double thinking or nothing. It's just liquidity, or it's just time-based liquidity. You just mark those highs and lows, you wait for a sweep, you get entry, and that's it. Time-based liquidity. Other than that, if you really want to be able to perfect your skills on the market, then you have to learn how to read price. And as I say, you're going to be able to learn it only like I'm doing with you guys, where we are watching live chat together, explaining what I want to see um, before I take entries, where price may likely go. That's how you learn. You don't just learn with me. You should also be doing your own tape reading. You should always be doing your own tape reading where you go to the chat, mark up the chat yourself. You know that if it does this and this and this, you engage. If not, you stay out and all of that. Sometimes you just don't have to click the button. Just mark the charts up and down and be watching how price action is behaving and how you would have reacted in real life if you were putting money on it. You tape read to sharpen your skills. Yeah. So any questions? I'm ending the call very soon.
There's one of the videos you sent to me when I joined the VIP.
Mm,
There is one of your liquidity strategy that's been seriously fascinating to me. I've had to watch the video about 4 or 5 times, which I'm still going to. It's one of my to-do list today.
mm,
You explain it alongside with my ICT 2022 model
yeah.
without daily bias. That explanation in that video is amazing. It works. It's a fertile strategy that even 5 minutes to 1 minute, it's working amazingly there.
Yeah.
So I've been trying to see how I can narrow down on that. I know that for me to do that, because naturally I gravitated towards it from my intuitional level, and I'm this type that once I'm learning different things, there will be a particular one that's,
Yeah, that will stick to
gravitate
you.
toward
Yeah.
me. I like the 15-minute stuff. I use it quite well too. But that particular one, I want to narrow down on it because it's like you explained in the video, it happens anywhere, everywhere.
Oh yeah.
Anywhere, everywhere. So I don't know if you just want to give a little nugget about it. It's really cool. I like the strategy. So thank you.
Yeah. Yeah, I think everything that I needed to say was said in that video. It's quite simple. 2022 model, looking for highs and lows, looking for displacement after the high or low is taken, fair value gap for entry. If we have a breaker paired with the fair value gap, you use the breaker for entry. Just very, very simple approach. Okay. Um, yeah, so as you go through the videos, no, you all of you are not going to be trading one same thing all the time. Um, one specific thing may stick to you, and you may want to use it for your personal model. So I may teach a lot of people, but everybody may trade a different way. I had one guy who said the daily time frame, the swing strategy, that's all he uses. And he told me he's found great consistency with it. All he's looking for is that if you are bullish, he's looking for a bullish fair value gap. When price comes to the fair value gap, he's taking entry from 50% of the daily fair value gap with no confirmations at all. And then he places stop loss below the fair value gap candle. I have a video on it on YouTube. And that's all he uses, and he's making money from it. And as you're also saying, um, the liquidity style is what sticks to you. So whatever sticks to you, make sure you backtest it, tape read it, and let it become your own. Build your own model around it as you are trading and having experience from it, you are going to learn so many things, and then you can perfect it to be your own. Just like ICT, he teaches a lot of different stuff, but everybody trades what he sticks to him. Me on Forex, I like to trade the weekly profile or the daily profile. So some people trade other different stuff, silver bullets and all of that. So yeah, keep back testing and practicing it and make it your own. If you don't have any more questions, then I gotta go. Let's monitor the rest of the setups and let's see how they play out. So we stand no
Okay,
confirmation
that's good.
given.
Thanks.
So yeah, let's monitor. I'm really happy with this V10 trade. It's just so nice. So nice. Wow. So any questions, guys? I think we have 4 minutes.
Uh,
We had a very successful trading session with two
Absolutely.
beautiful wins. Yeah. If we don't have any questions, then we are ending the call here. Okay. We continue some other
Oh yeah.
time.
Yeah, thanks. I appreciate it. I
You're
appreciate
welcome.
it.
So
Thanks.
monitor the remaining setups and then engage it as you see your confirmations. All right. So bye, guys.
All right, bro.